Hello, everyone, and welcome back to Unitrader. Today, we'll be starting our price action series, multi-video series presented by Trading Academy. Before we begin, the obligatory disclaimer: trading and investing in stocks, options, equities involve risk. Please educate yourself before you participate yourself. This is a long-term game. So, price action. We're going to take it slow and we're going to try to keep this as simple as possible. But basically, price action is the movement of the security's price over a specific period of time, which forms the basis for a security's price chart and makes technical analysis possible. Price action trading must be a process-driven system like Al Brooks, although Al takes it to a whole another level. You should never, ever trade these concepts on their own. Incorporate them into your trading system to keep you safer, not to expose yourself to more risk. You can keep it as simple as you want, and I like simple. All right. We're going to begin with price action candle types, and these are single or multiple candles that represent market sentiment and can help us in confirming the relevance of predefined levels. All right, so again, we are using this with some other sort of technical analysis, and that is up to you. So we'll begin with the doji candles. Doji candles come in a couple of different forms, but we're going to keep this basic. So we've got the normal doji candles, all right, and we've got long wick doji candles. And so what we're looking for here are candles that have an opening and closing price pretty much at the exact same level. And this is an indication of indecision. So when you see these like in the middle of a range, they don't mean anything. But when you see them at the top or the bottom of a range, they could start to show us something. All right, then we have dragonfly and gravestone doji candles. And these are very long wicked candles. The bullish version is a dragonfly, where you have obvious buyers stepping in and pushing price right back up as the sellers try to push it down. And this could be indicative of a potential reversal. So having said that, you would need to see this at the bottom of a move or a range or something of that nature. And it doesn't mean buy, it means, hey, so what's going on here, right? Pause and think. The opposite is the gravestone, where you have price pushes up and then a big wick is exposed at the top as the sellers push price back down to pretty much the open or very close to it. And this is just a signal that sellers are reacting and there's a potential reversal coming. Then we have hammer candles, which are quite similar, but you're looking for a bit of a bigger body, but it's really the same thing. So this is a bullish hammer, and this is what you would call a bearish hammer or a shooting star. Now, there's a lot of kind of overlapping names, a lot of Japanese names. Then in English, they'll call certain candles, certain names, and some people call it other names. So you'll see a bunch of stuff, but this is very context based. All right, so if you see this at the bottom of a move, again, it's a great sign. If you see it at the top of a move, not a good sign. All right, same thing here. If you see a inverted hammer, which you'll hear this referred to as an inverted hammer, some people call it a shooting star. You want to see this at the top of a move, not at the bottom of a move, right? And you may ask, how do I know if it's the top of a move? Well, you don't, but if it's, already going up and you see a bullish hammer candle, it oftentimes is actually what we call a hangman. And so this would be a hangman candle, looks very much like a hammer, except it's at the, top of a move, which is a very bad sign because this is generally showing us that buyers are getting trapped up in this zone here as they push price back up. And you have an inverse hammer, not an inverted hammer, but an inverse hammer, which is basically a hangman candle at the bottom of a move. So if you see this at the bottom of a move, you've got a lot of bearish pressure pushing all the way back down. You can see that there's a potential for sellers getting trapped up in here. So if we reverse, not a good sign. And we're going to one thing before moving on actually is we look at these, all right, hammers, dragonflies, gravestones. We're going to just collectively refer to these as pin bars. All right, especially the ones that are in the right place, right? Because they have big wicks or big pins. So you see price pushing down, pinning into a low or pinning into a high. That's what we'll refer to these as collectively, all right? Pin bars. So 2 candle patterns. We're just going to go over this quickly here, and then we're going to take a look at some of this on charts. But the big ones are the inside bar. So price is pushing up, and then you have a candle that opens and closes within the previous candle's body. Some people will say the previous candle's range. So there is a little bit of leeway in all of this stuff. All right. Don't take anything as 100% gospel in trading. It's not really the way trading works. But people do like that when they begin trading, but it's not the way it works. So inside bar is a bar that opens and closes within the previous candle's range. And then we have an engulfing, which some people will actually call an outside bar as well, where the second candle completely engulfs the price action of the first candle. All right. So an inside bar is a pause in momentum, and it offers us a potential continuation setup. It really does depend on how this presents and what context it presents. We'll go over some concepts of this later on. And the engulfing, this would be a bearish engulfing, but it could easily be a bullish engulfing. So if you see this at the top of a move, it does signify that sellers have taken control, and now we've got a possible reversal. All right, but again, it's possible. So we're going to keep it that simple for now. Inside bar, engulfing, pin bars, and dojis. And we're going to take a look at some price action on charts here and see if we can't make some sense out of this, and also, kind of some beware points. So let's hit the charts. All right, so on the NQ1 chart, 1 minute time frame. Time frames are irrelevant. You can use whatever time frame you wish. Price action's all the same. We're going to just take a quick peek here at some context. We are in a bullish state, putting in higher highs and higher lows. We've got a order block here. Price then comes into the order block, gives it a little sweep. And here you have that's pretty close to a dragonfly, but it is a hammer. All right, and you get the reversal. All right, so context is the key, right? And then you also need to be very aware of what's right next to you. We had a real aggressive move up, a real aggressive move down. That's always nice because it means we're generally going to come up and fill in some of these imbalances here. But you have to be very aware. You've got a fair value gap here. Hopefully you can get through it, right? So generally what you're looking to do here is you don't trade these candles on their own. You need the next candle for context, all right? And what we're going to do is build on these ideas. And we're going to get into 3 bar patterns in the next video, but I just want you to be aware of what you have to look out for. So we've got a low here. Price comes back to that low and an order block. So this is the bottom of a move, right? It's a good place to be looking for price action to tell us what's going on here. So we have a big push down. Then we get a bit of a indecision candle here. It's not a classic doji, but it is a bit of a 50-50 candle, meaning that it's like half body, half wicks up both sides. Looks pretty mundane, right? And then finally here you get this, and now you have this candle start to push up and away. So this is actually your confirmation candle. This just tells us that sellers are interested, buyers are interested here, and they're pushing price up aggressively. And then this candle is the one that really tells us we're in a good place to go here. Looking at everybody's favorite fart coin, we've got another great example here where we actually have 2 of them setting up. And this is a very nice bit of price action here we do have ourselves at a low of a big aggressive move. And now this hammer candle here, you'll notice that it's definitely a bit of a big body here, but it's still a hammer, bullish hammer candle. But if you look right to the left, it doesn't really do anything. You've got a inside bar here, and then you have obvious buyer stepping in, even on this way down, big wick there. Then you get this inside bar. It's just on the inside of this price action. The next candle puts in a lower low and a lower high compared to the previous candle. So yes, this is a hammer, but contextually, it's completely out of place. All right, it hasn't accomplished anything. This one, on the other hand, takes the low and then closes higher and also takes the high, obviously. So this is the candle that's really interesting. And then again, confirmation candle, there it goes. So it's not quite as simple as just thinking, oh, hammer candle plus confirmation candle, let's go. You've really got to, look around and think about what's happening in the context of things. And this is one of the big dangers of trading. People want to know, just like the secret weapons here. The secret weapons, there are secret weapons, but they're all contextual based, and it really takes quite a while to be able to figure out what is good and what is not, right? Not all of these things are created equally. All right. We move on to Bitcoin here, and we can see a really nice example here of we're in a range, but we are trending downwards. We get a pullback, and then you have this big wick candle here, nice pin bar. Pushes back down. Now this is a bullish candle, so you might think, okay, higher high, higher low. Actually, it doesn't put in a higher low compared to the previous candle. But what it does show us is that the sellers are kind of stepping in, and now you get a bearish engulfing candle, opens and totally engulfs the previous candle's body. And that is your signal that things are looking good, right? So sellers step in, bearish engulfing. This candle starts trading down. You can hop in on there. You're gonna have to put your stop loss above that high, so on and so forth. And this is a great example of, I refer to these as dum-dum candles, but this is a hanging man or a hangman candle. So you've got a nice up move here. You have a huge gap up at market open. Price pushes down and then pushes back up. So a lot of people are going to see this as a bullish sign, but it's actually a horrible, horrible thing to trade, because what is happening here is you've got all these buyers pushing up from the bottom here, and then look at the next day, gaps down huge, and it puts in a nice move to the downside, going down about more than 25%. So this is a hangman. This is not a bullish signal. This would be bullish if it was down here, or if it was down here, that's fine. But when it's at a move that's already done things, all right, so accomplishments, you've got a previous all-time high here, price wicks off of it, finally breaks through. You now have an inside bar, and in this case, it does actually amount to a continuation. But then again, this candle here, it's just devastating, all right? Not a good candle. Okay, so we're looking for these ideas to kind of come to place and come together, in a place where we can start making sense of what the market is doing, right? It's not just, again, candles. For example, here, this is a great example. We've got a very nice candle, very bullish. You've got a big wick at the bottom and then just buying with a little bit of a wick on the top. The next day, price gaps up huge, and then you get an inside bar. But this inside bar is a doji candle, right? So again, the idea that inside bars are signals of continuation is not really a great way to look at inside bars. They really can go either way. And then what I love to do with inside bars is just use them as a zone. So for example, you get the inside bar, you just mark it off from high to low. All right, and this is going to be a pretty decent zone because this is where indecision was happening. Nobody had control. So when you get back here, it might do the same thing. And you can see we push back into it, reject. We get above it. It holds slightly, just a little bit, and then it comes back down, and look at what it rejects off of, the inside bars. So that's one of my favorite ways to use the inside bars, is create zones out of them. They're very powerful. But this is a absolutely great bit of structure here to learn off of. Again, hangman, inside bar that does not result in continuation. So one of the things you're really looking for in these situations, when you have this idea that a bar is supposed to do something, right? It's really up in the air until the next candle closes, all right? So if this candle breaks this candle's low, then it's a pretty good chance that it's going to continue to the downside. And if it were to break the high, then it's a pretty good indication that it would continue to the high. So then you have to ask yourself, what kind of a maniac are you? We're all maniacs, right? Traders, we got to be a little bit on the, mental health watch list, right? But if you want to get really aggressive, you can just trade this on the break. And if you want to be a responsible professional, then you wait for the candle close. It closes below, and now you look for your opportunity to take that trade the next day. This is the daily chart. Pardon me. So that's it. And then here, for example, this is a question I actually got in the Discord the other day, is, certain candles like this. It's a very nice candle here. You've got some real aggressive buyer stepping in at the low here, but the candle doesn't turn green. So do I need the candle to be green? No, but do I prefer it? Yes. All right, so again, it's all about contextually what happens in that next candle. Price pulls back a little bit, starts trading above the open, hopefully finds support on it. You hop in and see if you can maybe trade it up to this bar here, or maybe take this high, or maybe you think it's really going to reverse and go for the all-time highs. All right, so very nuanced this game is when you're looking at price action. Like if you take a peek at what Al Brooks has created, Al Brooks's price action trading system, it is absolutely incredibly in-depth, all right? I don't want to say complex, but it is overwhelming for new traders. I've shared many Al Brooks things with traders, and they just give up on it pretty quickly. And that's a big problem with trading, is people give up on the hard realities, which is this is not a quick and easy game. This is a long process where you have to really put in time, and you've got to figure this stuff out. And that comes from watching it, examining it, taking notes, journaling, trade ideas, paper trading, etc., etc. It's not, oh, I see a bullish engulfing, I'm going to long this. Doesn't work that way. All right. So this is really kind of basically what I want you to think about out of this video is pin bars. They can be, dojis, dragonfly dojis. They can be hammers. Sometimes they won't really look like a hammer. They might look like a half and half candle, something like this, right? You've got half body, half wick. But the important thing are these pins. And if you see here, we've got a range that we've put in here, right? Here's our high. Oops. Okay, a high of a range. And then here is the low of a range. All right, price is just bouncing in around here. And you see these pins off of the lows here. It's giving you an idea that these lows are strong, right? So in the old days, this is what the traders would call an order block, because every time it comes down here, there's just these resting orders, and it just keeps hitting, yeah? So pin bars, very important. When you start seeing them wick into a certain zone, it's almost as if there's just all these resting orders here. And price comes into it and aggressively shoots back up. Price comes into it, aggressively shoots back up. It rips, comes back into the zone again, aggressively just getting bought up, right? So really, really important to look at these wick zones, these pin bar lows, and what they are pinning into, right? So for example, here we've got this big fair value gap. Again, daily chart. Price is ripping up. Here you see sellers also stepped in after closing out this gap. All right, and then when price comes back into this wick zone, you see it has a pretty strong reaction. Price opens up on a big gap down into that wick, and then big reaction. Again, a couple more candles of reaction here, but it never can turn itself around. So in this context, we would just want to be looking at market structure, right? High, low, lower high, lower low. Is this a great idea to be looking for a long here? It could be a two-legged pullback, but you know, is this a great idea? Is this a low risk trade? And I would say no, it isn't, right? What you want to see is some sort of continuation to put in a low into a better level, and maybe get some confirmation on turnaround, right? So that's really kind of how I want you to think about this right now. And then what we're going to do in part 2 is we're going to start looking at 3 bar patterns, and specifically one type for highs and lows. And we'll continue to look at it in context with certain levels. So it doesn't matter if you're a support resistance trader, whatever you're trading, price action can definitely give you a little bit of insight into what's going on. And again, you can make it as complicated as you want, or you can make it as simple as you want. So we're going to try to keep it real simple. That's why we're just going to say pin bars. We might say hammers, that sort of thing. And then, yeah, in video 2, we'll get into the importance of dojis and what we want to see for certain 3-bar plays. All right. So enjoy that. Get on the charts, look around, and identify any sort of areas or previous trades that you've had that maybe went your way, didn't go your way, and just look at the price action, see if it could have helped you in any way. And of course, in a contextual market structure based sort of way, right? Anyhow, that will do it for today. Until the next one, stay safe, be well, and see you soon.